this was all about organizing the world's data from the bottom up. Yep, it always was about that, which is that we can use the self-sovereign layer to present the right data, the right time, the right form on an ongoing basis to AI. This is a shift in the computing stack from Web 1 to Web 2, Web 3. But where we really want to go is to have a semantic web where the meaning of this software is understood by other pieces of software and its machines. Somehow I find that if you look back at these things, some of them, they seem sort of simultaneously contentious and obvious at the same time.
My name is Violeta Chekan, or VC. I have 12 years in startups and early stage investing. And this is season 2 of Web 2+1 with VC show. And each episode we have global Web3 leaders and we do interviews with them. So also, if you like this podcast, please do check out our partner, Epic Web3 Podcast. They also do interviews with Web3 founders of the leading Web3 products and protocols to discuss the future of Web3. And today we have Richard Muirhead, who is a co-founder and managing partner of Fabric Ventures. And Fabric Ventures is a VC fund that invests in Web3 and decentralized data networks. So they have already more than 250 million in assets under management and also 15 unicorns. And it's not only this, but Richard also was a founder himself with 4 companies with 2 exits, and one of them being also acquired by Oracle. Richard, welcome to the show.
Thank you, Violeta. Very pleased to be here.
I also would love to start, from your, experience as an entrepreneur, because when I went to your Twitter, were Web 2+1 founder. And I was like, oh my God, this is meant to be, because my podcast is Web 2+1 with VC, right? So I was like, okay, here is something that we need to discover 100%. So I would love to ask you, what drives you as an entrepreneur, as an investor?
What drives me, I'll keep the super quick version, is I guess everybody has that, a slight fear of mortality. So it's doing something of note so that in some way, shape or form, you're not forgotten, if only by your children and your children's children and so forth. So doing something of note, that's what's driven me in general. But on the Web 2+1, actually, it should say Web 1 plus 2, because just because of the character limit, it was meant to say that I'd been in each wave, and I couldn't write web twice, otherwise sort of running out of characters. But another way of thinking about why I made my way to investing is that I started, I was kind of on the kind of geeky scientific end as a kid, and first kind of more amateur naturalist, and then kind of coding when I was 9, 10, 11, 12. And then I did a little bit of coding when I was at Cambridge doing engineering. But I was definitely not a good enough developer to really develop software. And so being not good enough to develop software, the next best thing was to be an entrepreneur in the startup space, getting people on board and energizing them and focusing them on building great software. And so that's what I did originally from 94, 95 through till 2009. So more or less straight out of university. And I kind of felt like I did okay in doing that. I certainly learned a whole raft of different lessons and had taken a company to north of $1 billion in market cap and had suffered all sorts of the challenges associated with scaling and with hiring people who are considerably older than yourself and so forth, all before the age of 30. I reached a kind of a point when, I'd always sort of understood some of the nature of venture capital. I'd raised venture capital. I'd held great respect for venture capitalists and the brands that had been built. This was, I guess, in particular, kind of Kleiner Perkins. It was probably Mayfield back in the day. It was Axel, where I ended up as an entrepreneur in residence at the turn of the century. Between 2 startups I did. And so when I got to kind of late 30s, I was tempted to kind of hang up my founding and operating boots and become an investor, and didn't quite land a job at Accel. Um, some people who are still there now, I got the position, I think, ahead of me, and they're great people and probably better suited for that particular type of firm. But that really whet my appetite for being trying to be a great investor, for not just building something myself, but backing other great builders. Maybe within that was an acknowledgement that I was not as good a founder as I would have liked to have been. I certainly felt like, although I had success, there was so much that I didn't manage to achieve with the companies that I built. And so this combination of actually building my own firm and also investing and backing other amazing founders was a pretty kind of potent one. And I thought, of course, I'd have it all done, between 2009 and, a couple of years later, 2011, 2012 would be up and running. But it took probably about a decade longer than I expected to build Fabric, to have its first major institutional fund.
Do you remember the moment when your perspective and approach as an investor have been shaped, especially for Web3?
Okay, well, I mean, if I may, I'll talk a little bit about what happened before. So I learned what venture capital was whilst I was being a founder trying to build a company. Like, learned from, what a seed round looked like, what Series A, what was the notion of those rounds, how you could raise capital for a minority investment for, when you hadn't built anything. The whole getting your head around at that point, the whole idea that very small companies could possibly ever disrupt, dislodge, or kind of create, large markets, just dislodge the kind of existing, incumbents. That was something that I think is still people find somewhat counterintuitive if they've not kind of looked at it in detail, and was a kind of new set of concepts to me, as a founder. So I think, I started to understand it from that perspective. I started to understand in both in the 90s when we were building a network related company, and then a kind of data center application related company in the noughties, that I was missing some of the kind of the venture partners, the partners within venture firms, that I felt I could have very detailed conversations about the very technical products that we're building. So for me, at least, I had an insight into the value of specialism from venture investors, and then that was compounded by my experience when I was at Accel Partners, which I mentioned, where they spoke a lot about the value of the prepared mind. They took this paraphrase from Louis Pasteur, saying fortune favors the prepared mind. And so and I think this is on an arc that sort of venture capital has been through, where it was people who had come out of kind of, Citicorp, and they created sort of private equity and then venture firms from there, and who generally didn't have a technical background, to the point of realizing you had to get actually into great detail about these areas, and you need to be prepared. And I think the next phase for me was, as I sold my second company, I had seen the rise of Y Combinator, with kind of very, which kind of spoke to the kind of increasingly global, democratized opportunity for many people to build many different companies, and how we should cast a wide net to try and get to all of that possible talent. But also great writing from, Paul Graham and then later Naval Ravikant and other people who were starting to blog about, codifying what it took to build a startup and what was the attitude to each round, how to think about how to bring advisors on board, how to think about how to manage your time, how to think about, product market fit, famously with Mark Andreessen, how to apply data to that process. So it wasn't just like total artistry and instinct, but you can actually make it methodical, the science of startups. And then the launch of A16Z, which was a new breed of firm that was about where you put the founders at the very heart of everything you did, as a firm where they were your client, not as a kind of something was more akin to someone who was taking an application for a loan like a bank. I mean, that is the opposite of the type of venture firm that I would ever want to be building. Rather, to be as much as possible and in a humble way, because it's very easy to overcook this, shoulder to shoulder with the founders when they're out there kind of, trying to make stuff happen. And so that was the kind of firm that really appealed, that 360 support inspired by Mike Ovitz at CAA that A60 did. And then the other lesson I'd taken, and this is related to the specialization, is that the value of specialization can also be that you can pick the timing of a new wave of opportunity. And so when I wanted to build Fabric, I was looking between 2009 and 2012 for that wave, and a wave that was significant, that kind of really allowed you to feel like you're doing something momentous, involved in something momentous. And when I stumbled into Bitcoin and then read up on DAX originally 2012 and 2013 when they're kind of rechristened DAOs, it just, for a bunch of reasons we could go into, the penny dropped. I thought, wow, we can kind of organize humankind with software that can just work and provide incentives and coordinate our activities. This is the future. And so it penny dropped in. And I won't say that I saw everything that I see now in terms of this kind of the power of token economics and incentive mechanisms and a shift to a kind of third form of capitalism, which is kind of a collective capitalism or modern mutualism. And this sort of came together over time, but certainly the power of, the DAOs and the DAO behind, the Bitcoin blockchain, for example, was apparent to me, and that got me excited. And I thought, wow, this is something I'd like to be part of.
Wow, it's I could listen and listen. So investing from 2013, it's 12, right? Even 12.
I started investing in 2009, but then we kind of formulated the strategy and created a firm 2012, 2013. Yeah.
Yeah, and your investment thesis is built around this concept open web. Can you elaborate a little bit? What is open web? What do you mean by this, and why is it important?
Yeah, so I think, as I said, we were looking around for different big waves whose time had come. You don't want to be bobbing out there amongst waves for too long without the wave, be able to catch one. So you have to think about the timing. And really, I had spent some time in my second company looking at machine learning primitives and looking at the ways in which you could build ontologies that represented the real world, models, and use them to reason about, inputs from the real world. Effectively, I guess, kind of like prompts in the current kind of ChatGPT vernacular, and also how to use that to that output, those inferences, to augment the operations of kind of actually, very knowledgeable and specialized and expensive workers. In this case, in banks. And so I'd looked at machine learning. I looked at this kind of coordination of people in, and I then came across, as I said, Bitcoin blockchain and DAOs and so forth. And actually, I must admit, when I first was looking at the kind of potential for investing in the space in 2012, 2013, I was lucky enough to be drawn into a hands-on mode with it by my very good friend from Cambridge University, Dr. Stephen Seven Waterhouse, who's actually now starting his own firm, Nazare. And he was in the process of setting up Pantera. And so I collaborated with him. She first at sort of Fortress and then at kind of Pantera on a number of projects, including the Circle and there was Abra, and there was notably Bitstamp, the investment in the kind of autumn of 2013, out in the kind of the autumnal chill of Slovenia. And but when we did that, the kind of simple thesis at that point in time was that Bitcoin was going to be digital gold. And that made sense. And so you could buy into the space by buying digital gold. But it was much harder to see how there were going to be many other plays to invest in. Although, Mastercoin, colored coins, counter pain. There were a number of other players starting to emerge, and soon after that, obviously months after that, kind of Ethereum. But it was harder to see there was going to be enough to invest in. But then, and I think it was Gav Wood who coined the phrase Web3 sometime in kind of 2014. But when he did that, and I was looking at it, it reminded me of what Tim Berners-Lee had described as the machine web or the semantic web, actually about sort of 13, 14 years earlier, just after the web had hit the kind of dot-com boom. Said like, wow, that's great having something that is read only and humans can consume it, or even read and write like Web 2 for humans. But where we really want to go is to have a semantic web where the meaning of this software is understood by other pieces of software and hence machines. And that can operate at an entirely a different level. But what was missing, and I had looked at startups in that space when I was at Axel Partners as an EIR, but what was missing was trust, or in the context of Web3, trustlessness. The ability for, without third-party trust, for one piece of software, aka smart contract, to trust another one. And so that all sort of started coming together for me, and I started seeing not just like Bitcoin, the asset, or the other kind of Litecoin and forks and so forth that have popped up, or then even Ethereum, and not just seeing the blockchain, but seeing that this is a shift in the computing stack from Web 1 to Web 2, Web 3, but not just one that was centered around the use of cryptography and distributed computing and game theory in order to deliver these new crypto assets, these digital assets, but one that was a bit bigger both directions. We had distributed computing underneath it, lots of we would now call accelerated computing operating on a distributed basis. And then above it, AI. Because what we then sort of went on to develop our thesis into was, that the function of the sort of self-sovereign layer in the middle, the layer of decentralized data networks, the function of that is through the power of the individual in the context of a collective for them to organize their data, their value, and ultimately themselves from the bottom up in an emergent way. And what's the point of organizing that data? It's actually to present it at the right time, in the right format, at the right place, to algorithms. And so that was a kind of an epiphany we had, that the whole point in this stack, distributed computer, self-sovereign layer of decentralized, ID, data, and value, and then AI on top of it, is for the middle layer to present the data to AI. And obviously now, it had started, ImageNet and AlexNet and all of the inventions that around about that time, had kicked off the enthusiasm for big data. And everyone's like, what is big data? How big does it need to be till it's big data? And how do we work this out? It was kind of a lot of people wrestling with concepts, but obviously this has accelerated significantly over the last couple of years. And whilst the kind of bottleneck, arguably at the moment for the kind of AI revolution, the AI first revolution that's going on, it has been access to compute in order to crunch the existing data sets. And I think there's still 10, 20, 30 times as much data still to be crunched. Ultimately, as we build those foundational models and as we build community models and even build some specialized models, we believe that the focus, the bottleneck, the value will turn to the augmentation, through the retrieval of data to the training of those models, and then further fine-tuning of those models with more local, data sets that are, contemporary or, contextually relevant to, whatever problem you're trying to solve. And so that's that in that area, but also in a whole number of other areas, there's this tight coupling between that self-sovereign layer and AI, and one that arguably is going to be, is going to unlock a lot of value and also keep AI safe and aligned in very important ways as we kind of enter this next era. So that's one version, at least, of the open web thesis.
Yeah, it's it's cool. Thank you so much for explaining this. And I would love to know what are the biggest obstacles that we have right now for the decentralized networks.
I think we've seen that
Why we are not in open web.
Yeah, well,
Why we are not an open web? Yeah, yeah.
so if we leave aside to one side for a second the regulatory question, because I think in some senses a lot of people have spoken about the regulatory question, that if we although maybe we can't, but the key to the open web working is to bring to bear a new business model at different layers of this new stack to coordinate those resources. So if we want to coordinate the hardware of many different types, call it a marketplace for GPUs or TPUs or XPUs or whatever. If we want to coordinate the data that's available, as I was just describing, if you want to coordinate the talent to work on different problems, and maybe in relation to software development, but maybe other things as well. If you want to coordinate the governance, if you want to do all of that, you need a business model. And part of what we think is important about the open web thesis and the open part of it is that we provide an alternative business model fueled by token economics that is superior, not just cheaper and faster and better, but fundamentally unlocks more value than can be achieved through the profit maximizing, centralized, closed form of capitalism that exists today and obviously prevalent in quite a narrow way, effectively around advertising and commerce in Web 2. And so we need token economics to unlock, the decentralized coordination of the resources I just described to make, the open web work. And if we're going to have that, we need to accept that there are new forms, these tokens that are core to, providing skin in the game for participants in these networks and providing upside to them and are crafted hopefully into successfully sustainable digital economies that are kind of all intersecting, that those tokens should be viewed as a novel thing. They're a novel combination of a product. They're actually a product component within a software network, and they're also a financial instrument of some description. I think it's kind of round peg in a square hole to try and call them one type of money or another, or to call them a security, or call them a commodity. They're a new thing. And if we want to unlock that, we need to tackle some of those new challenges of trying to work out how to build those sustainable digital economies. So that's the first, in a sense, that's the most important challenge. That is non-trivial. I mean, it's an incredible opportunity that we can actually run these experiments and come up with white papers and work out how we're going to create inflation and minting and burning and staking and sinks and all of these things that exist within token economics, and non-fungible tokens and fungible tokens and soul-bound tokens and all of these things that contribute to the function of these systems. And that is still a kind of a major frontier, and it's only really been proved properly around kind of proof of work and proof of stake, and a little bit now some of the other areas that deepen around network perhaps, and we'll see how we go. But we've got to make it in crowdsourcing data and activity to label data. That would be one, as I mentioned, and well beyond. So that's critical. But coming back to this question of regulation that I said I wouldn't discuss, as we're trying to push that frontier back, it is important that we're not inhibited from doing so, because just because it's novel, people are prevented from doing it, from adopting it, from experimenting with it, from owning it. And we just happen to be on a day. I hope this doesn't ruin your podcast, but it's that I believe yesterday there was a repeal of I forget the exact statute or whatever in Congress of SAB 271 or something like this, but about the way in which banks must recognize an asset like Bitcoin and other tokens on their balance sheet, which causes them to have to sort of match it with solvent a capital sort of one-to-one, which is just not workable when it is actually an asset in its own right. And so I hope that kind of change, that has been repealed, at least in Congress, as I understand. But we're now waiting to see whether this will get vetoed by the president, by President Biden. And I just, mentioned as a point, which is like, there is a battle going on right now in the US, which for the moment actually has, it seems quite politicized, and for the moment actually has kind of had a sort of knock-on benefit to the rest of the world and to the UK and Europe, where at least even if you don't like some of the regulations, at least there seems to be some consistency and clarity around it. And I hope we capitalize on that opportunity, and I hope ultimately the US catches up, because I think there's way more to be gained from us all being able to kind of build this community together. So yes, getting the science of token economics, improving that, pushing the frontier of that back, that's probably one of the number one things that we need to do, that will take us to the next stage in terms of the open web, and what we believe that's going to lead to an open economy also. And regulation does have a part to play in that, even though I promise not to talk about it.
But like regulation is also kind of like comes as centralized mechanism, right? So I would love to challenge you and ask you. I know that you are like all about like open web, and that's your thesis. But where is the balance between centralized systems and decentralized systems? So are we having like moving to like full decentralization, or like what is your vision on that?
I'm probably pretty reasonably could be categorized as a decentralization maxi. I think that, you can get into it. Of course, decentralization means many things. And you can challenge on the systems level whether or not it makes sense to decentralize something that needs, super kind of high throughput, and therefore you're optimizing for kind of transaction per second or something. But that's kind of just one part of it. Ultimately, and there's unruly capital is something that's looking, and importantly, the value of decentralizing the physical world. There, Stefano Bernardi, mostly down in Italy, is looking at how we need to push critical things like power generation and distribution out into a kind of a decentralized model and manufacturing, other things. I think that's very important. So not just virtual decentralization of governance and of the networks supporting these software platforms, and of our identity and our ability to have sovereignty over our identity and our value, but also even the physical elements that are required. And we've seen now how that computers are a bottleneck now, data becomes a bottleneck at some point in time. Electricity has already become a bottleneck, just the transformers required and the distribution of electricity and the electricity generation itself in order to power AI is already kind of a bottleneck. So, whenever things become a bottleneck like that, the natural tendency of kind of markets and humans within markets is to kind of gouge prices, or even worse than that, start wars. And so I think it is pretty important for the world that we have a decentralization and a kind of a local strength, geographically speaking, if not nationally speaking, in all of these core technologies up and down the stack that we've kind of been talking about. So I'm sort of a maxi in that sense. I think if we come to the point of regulation and whether that can and should be enforced centrally, I think maybe the approach that's good is that, I mean, it was misunderstood for a long period of time, that crypto assets and blockchains supported kind of illicit dealings because they were entirely opaque and anonymous. But of course they're not. It's quite possible to see what's going on, and we've seen this through the success of Chainalysis and Elliptic and other folks in working with the security services and on different things, and the way in which you can find folks who have absconded with funds and so forth. So we know that's not the case. In fact, it's quite the opposite, which is that there is the potential in these systems to be, because they're inherently data rich, they're inherently kind of automated, they're actually inherently sort of immutable, and then therefore, there's the potential for publishing, making transparent the transactions that are going on and certain characteristics of those transactions at the time they take place, or even prior to them taking place, and making sure that they are compliant in the way that we need them to be. And they're compliant in the sense that, whatever, there's a counterparty who isn't already, clearly suspect, or making sure that it's recorded and the tax is paid on that particular transaction. So there are a number of ways in which you might want to sort of check for its compliance. And I would suggest one of the things that is the problem with regulation is when it relies on a whole series of intermediaries and third parties who are effectively provide a point of centralization between other parties. That's where the problems arise, because you then get with each layer you get a sort of it's not just a fact-based interpretation of exactly who is nefarious and who is not. You get buffers, layers of insulation and put in, which and comfort that, well, they might not be bad, but let me exclude them anyway just in case. And then the next person excludes even more people, and so pretty soon not only do a lot of people get excluded that maybe shouldn't be, whatever. For example, random Ukrainians getting excluded from doing business, with the banking system because of the war in Ukraine, and getting swept up in one way with that kind of hue and cry. That's and I would even say my personal opinion is that I think we've got to be very careful to unfairly punish and withhold services, financial services from an entire population by dint of which passport they hold. I think that's also a very blunt and unfortunate instrument to be using. So I think that's what happens when it's centralized, is you have these kind of trusted intermediaries who intervene. And so I think the possibility of being able to have very transparent, data-rich transactions that exist within systems that can effectively self-regulate on a transactional basis should put us in especially if we build them on a kind of, can't be evil basis, should put us in a position where even regulation is something we don't have to rely on, centralized authorities to do. We can allow on a kind of a bottoms-up kind of effective form of self-regulation, even in terms of deciding what it is. Market forces probably even determining, what it is, how much we want to enforce, what the nature of those regulations are. But anyway, I'm not a regulatory expert. That's just my view.
On where we are as venture capital in this decentralized future. So how do you see the role of VC is evolving in the next 3, 5, 10 years?
I think definitely there is. So it should be the case that every asset class is kind of open to anyone and everyone who wants to participate. And I think that the ICO, as it was, and token sales as they stand today, it can be a much more democratized form of kind of a very early stage funding for all sorts of projects. One's in Web3 or one's outside of Web3. And once we have those kind of real world assets, those kind of tokenized versions of kind of equity. So I think that's important. And I think, that's kind of a principle, a kind of a guiding philosophy of why, again, why should you be denying individuals access to those asset classes if it can be managed, cost effectively. And of course, in principle, at least it could be automated, in the kind of Web3 environment. So that's the first thing. I think the predicting the future is really hard. And I wouldn't have said that venture capitalists predict the future, but we try and sort of predict which founders are going to predict the future. And they're coming from the future and have a kind of that clear-eyed perspective of where the world is going. And obviously then try and be, good partners with them, if not good buddies, and back them to the hilt. And if what you're doing is making that judgment, in my experience of what decision making is like, when you're trying to be a judge of the people involved and of what that means about the future, is that it's a very individual thing, that you build up a kind of a muscle, a pattern recognition, an experience that might allow you to do that in general in venture, and might allow you to do it maybe in a specific space as well. And then that actually it doesn't, although discussion amongst a few people and even more debate amongst a sort of slightly broader set of people can be healthy, it doesn't really lend itself to, it's not a committee decision. It's not like a vote where you can work out where do we come out on this thing. it's a lot of instinct and synthesis, and you sleep on it and wake up and feel, I feel really great about this. And the human brain is incredibly good at that. It may be that, like, and it's another speculation whether we're going to be able to build large language models that that become sort of equally as good at it. But and therefore, humans, need to be kind of in the loop in that sense still. And I guess there's also kind of value in the brands involved in some of the humans and in the venture firms that are involved. So that's not to be overlooked. You create a momentum and a self-fulfilling prophecy to some degree, that if you manage to energize and attract, a venture investor and their brand and their team to come and back you, it makes the next time you're pitching for a talent or pitching for a customer or whatever, it makes winning that much easier. And this thing snowballs and, delivers a virtuous circle over time. So I think for those reasons, I think you'll still see a lot of mileage in having venture investors involved in human form. But I think there are, and we back Alliance DAO, for example, and Web3 Social DAO, and we've been involved in a bunch of other DAOs over time. There are variants and flavors that can work, and especially can deliver large-scale capital allocation to lots of different projects, and harness the power and the interests and the incentives of large sets of advisors all at once. And I think, there's definitely mileage in that, and that's something we'll continue to both explore and invest in ourselves at Fabric. But I still think, folks, it's kind of critical to have sort of folks in the loop there somewhere.
Yeah, so you mentioned the decision making, and that's a lot of based on instincts. So what is in your opinion, separates great founders from those who succeed and those who fail?
I mean, one word is probably grit. It's like those who never give up. And obviously, like most of these things, it's always countered with, somehow it's grit, that, but somehow being grounded in reality. It's grit, but with, the ability to take the blows and the learnings on an ongoing basis, so you improve. It's kind of getting on with the actions, knowing that, through that mobilization, that motion, you then learn what it is that is right and what it is wrong, and you refine your approach. So it's that kind of, I think it's that philosophy, that attitude that I think is important. And then after that, folks who know their area kind of cold, like you're trying to prepare, they know the area in depth. If they've got that grit, if they've got that specialized and hopefully complementary, sort of knowledge set, and kind of our first principles thinkers, because you never know where you're going to need that capability, but also good at using, standing on the shoulders of others when that, it's important to get on with sort of building the company. So the combination of those three different things, I think, is the kind of a pretty critical element.
And what about your portfolio? So you have already 15 unicorns, right, that you invested. So think about one of the amazing company. So what made you invest in them? This very great example.
Somehow I find that if you look back at these things, some of them, they seem sort of simultaneously contentious and obvious at the same time. So contentious in the sense is it tends not to be that, everybody's cup of tea, that they'll flavor, of investment. Sort of obvious in the sense that once you've read it, you can't unread it, and it just makes sense that this is going to be a project that deserves to exist. I think, we backed Sorare, which is, the football cards and sort of twice weekly fantasy football game, and built, raised an enormous $500 million fundraise from it was the biggest venture round ever done in France at the time, and they, but in a sense, it was just sort of obvious that if you could create these non-fungible tokens effectively that were, on the kind of Ethereum blockchain and incentivize or kind of lure athletes and teams and clubs to participate in this game because it was owned by everybody collectively, including the players, rather than being owned by one sort of centralized entity, that was going to be compelling. And I think the icing in the cherry on the cake was, in talking to Nicolas, the CEO, and it's a quiet confidence, that came across that made one feel that this was an obvious sort of a project to back. I would have said it's contentious in the sense that folks who knew the space too well, sort of the football cards, or of kind of football in general and acquiring IP, many people have been burnt in that space. And in a sense, it's useful as you take these extremely high risks, and that is, of course, the name of the game and venture. It's useful that you don't know, in some senses, or that the founder doesn't know too much about the risks of getting it wrong, because we have to think about the things that are going to go right in these projects. And if you're too preoccupied by it hasn't worked before and these are the reasons why, you never try, you never start. So a little bit of, let's call it naivete, if not ignorance, can go a long way. So Sorare, great. Polkadot was, in a sense, different in that it was, we'd hosted Gav Wood presenting the Ethereum paper in January 2014, and then the Coin Scrum meetup, and then so we knew him, and then I met Jutta Steiner over in Berlin and heard about ETHCore, which is kind of spinning out of the main Ethereum development cluster, and then read the Polkadot white paper, the plans to kind of fix everything that needed fixing in Ethereum from Gav Wood's perspective. And given he was the CTO, he seemed like he had a pretty good perspective. That just made sense. And, it's interesting, of course, that, then the whole arena, the whole area of kind of layer ones has had a kind of continues to be an area of massive debate. Like, have we got enough layer ones? Do we need, layer threes now? How are they going to interoperate? Ethereum winning, does that actually reduce the number of layer ones? Actually, does it mean it wins in one sense around EVM, but actually all of the complementary sort of increasingly modular components of the blockchain ecosystem are still required? And so, this is, way early and was one take of that, with back in the day. And so it is, it's something that fell into place for that reason. So I think Polkadot is another good example. And then I guess another one, that we're sort of definitely proud of is Ramp, Simon, Polish company originally. And, it's just a pretty clear and obvious insertion point. People need, low friction ways of onboarding, fiat into Web3 apps. And this is what they focused on, and actually they took it in a methodical way, trying to keep on the right side of the regulators. And I think they've reaped dividends from that approach over time.
So you mentioned so where are we moving? So is it layer ones, layer two, layer three? So let's talk about where are we moving? So do we need right now more infrastructure, or are we moving to building an application layer?
I do think to break down what we see going on, I'll do it in the following way. And this is just our perspective. We think the kind of open web stack, described it before, is kind of coming to some kind of maturity. And that's going to lead to an open economy, one which is more prosperous actually we had before if we do it right. It's more inclusive, it's more equitable. And importantly, we can tackle a whole bunch of, sort of humanity level challenges and opportunities. Okay, so we'll come back to that in a second. And in our thesis, we think that there's an increasingly mature modular, blockchain stack appearing, which has got, obviously it has Ethereum in it, it has, Cosmos and Celestia in it, it has Solana in it, has Near in it, and it has different protagonists that deliver different components of this ecosystem. So, for example, the Celestia's push to start by delivering, data availability as one particular component is an example of that. Near also delivers some of that capability. So and we think that for the first time, because of the work around sharding, because of some of the work done in upgrades to the capabilities of Ethereum, because of the work done around account abstraction and Ethereum, and it was already resident on Near historically, that you've got an increasingly easy to develop upon and easy to use with sufficient abstraction levels in it and for the consumer and scalable blockchain that is ready for consumer adoption. But some people get frustrated it's taken such a long time, but it really it's pretty complex work, yeah. And I think we've come along an awful long way in this sort of 15 years actually. And then so that's the first thing we think is ready, and we start to see consumer, quite often social apps, because from my perspective, like every Web3 app is intrinsically social because it's got your identity and your value and your data at the heart of it, and you can operate on a peer-to-peer basis. And then, then the other thing that we see is this ongoing reimagining, reinvention of money. That Bitcoin is digital gold, but now with more things being built on that, we were back as a bulk stack that became stacks, from having first encountered those guys 11 years ago, and then people doing, obviously kind of art on the Bitcoin blockchain as well. I think that will continue to be digital gold as a use case for Bitcoin, but then obviously DeFi and ultrasound money in the form of Ethereum is leading to all sorts of opportunities. And beyond that, we clearly have seen now that it's sort of surpassed in terms of transaction value, both Visa and MasterCard, true mainstream adoption of stablecoins. I think it's well understood at this point in time. And that's now been baked in as a kind of settlement layer for alternative rails, as they like to call it in the kind of payments world, for both, for various types of payments and remittances, whatever, both retail and business. So that the whole kind of open finance spaces, we'd like to think of open finance and payments, we think is continuing to kind of permeate the ecosystem and create opportunity for founders and therefore for kind of funders alike. And then the third area for us, and in a sense it goes back to what I said, so this was all about organizing the world's data from the bottom up. Yep, it always was about that, which is that we can use the self-sovereign layer to present the right data, the right time, the right form, on an ongoing basis to AI. And that is going to power AI. And then AI in turn, of course, will power a whole host of different applications on the health side, on the finance side, on the material science side, on all sorts of different areas. If it can, Web3 can help solve the compute bottleneck, if it can help solve the data bottleneck, if it can help solve the governance, provide a form of governance that is transparent and incorruptible and so forth for these super, the sort of globally humankind level criticality of systems, then that I think is going to be a very powerful combination. So we think kind of AI and what we would call, I think internally we call it kind of open intelligence, is the kind of third pedestal that we have within our kind of our thesis. But within that, as I said, it explodes into kind of pretty much every sector you can think about, from gaming to health to materials to finance and so forth. So that's kind of what we see as the kind of the opportunity. And so there's a bit more outside of the infrastructure. If you've got those three pedestals, you could argue there's now more areas for applications to being built. But I think it will continue to be a kind of recursive process. Infrastructure gets built, applications emerge, applications crush the infrastructure. Infrastructure needs to be improved. This is a very complex, ideally open, interoperable, open source stack. We think that's important, such that it doesn't kind of just get funded by a few centralized, bodies, and making that work, and dealing with the trade-offs of decentralization, but still achieving the speed and so forth that one needs is hard. So there's going to be plenty of infrastructure still to be built as well, I would imagine, over the coming decades, not just years.
And before we go to the fun part, I would love to ask you something. Can you learn to be a venture capitalist?
I'm sure you can learn to be most things. I think if you're good at learning, I think it may be more the question. And I wouldn't have said that there's something kind of, you know, some magical touch. I think and you can probably do, and you can do it in different ways. But I think if you're hopefully good to work with, if you're, I mean, it's classically if you're kind of curious and then always learning. And you take that curiosity and try and get inspiration from founders and kind of allow yourself to be drawn right to the edge to see what's over around the corner, see what the founders are seeing that's around the corner, and then I think you'll do pretty well. But I would, what do I say? Certainly for me, I think it's just super important just to spend time with founders and understand what they're talking about, and try and force yourself to write that down. And if you don't publish it out there on the web, tweet about it or whatever, at least sort of write it for yourself and write it for your amongst your team. And if you do that, I think you will accelerate your own serendipity and stumble into great opportunities. And then the other thing about learning to be a venture capitalist is don't stay theoretical for too long. Money is this technology that allows us to kind of keep track of where we really showed a commitment, and then we'll get rewarded from it. And so the best way to do is to start writing checks, even if they're very small.
All right. So should we move to the fun part?
Let's do the fun part.
Let's do the fun part. Okay, so if it would be in real life, obviously it would be much, much more fun. But well, I will just, push here like these cards. Okay, so we will take 2, 3, maybe 4 questions, depending. So how we will feel. All right. So I will be just doing mixing. All right. So you just say whatever you feel like stop, and I will put the up one, and we will see what is the question is, and you will need to answer. Okay. All right. So say stop when it's like you feel like.
Stop. Stop. There's a delay.
Okay. So okay, so we have, okay, it's, so here is the question.
Yeah. Got it. What is the number one thing on my
So
bucket?
what is the list right now? Yeah, so what is the number one?
My goodness. Finish a novel, like actually have enough time to sit down and finish a novel. Maybe that betrays that I don't know how to manage my time, and I'm not making enough time to focus on reading a book. But that would be great, just to read a book in peace. I sound maybe like any kind of harassed kind of parent, perhaps, but more maybe on a more aspirational level, although that is probably pretty aspirational for the moment. I love kind of like an adventure holiday. So going for a trek. I did some trekking in the Grand Tetons in outside of Jackson Hole the other day in Wyoming. That was pretty amazing. And I've done the Himalayas a couple of 3 times. Some real proper trekking like that, adventure where you feel like you're fully out of touch and maybe a little bit at risk in peril. That would be my bucket list. But I mean, no one. I haven't got one. I'm not fixated on one spot. What I loved back when I was 18 was going trekking in the kind of fly-infested, crocodile infested, stinky heat of Kakadu National Park in the Northern Territories of Australia. So something like that, I guess.
You're from Australia, remember? You're immigrant, right? In UK.
My parents are Australian, exactly, and we settled here finally when I was 7. Yeah.
Well, do you come back to Australia?
I tried to. And we used to more often, my brothers and I, when we were younger. But it's just hard. And of course, Australia and New Zealand, at least from London, is still the kind of the only spot. The eastern coast of Australia and New Zealand is the only spot you can't fly, in one leg on a plane. maybe I'll get in trouble with the climate folks for this, but I did go for a weekend for a wedding once, but I don't recommend it.
All right, so let's do the second question. So, all right, so
No.
all right. So we are. Okay, it's a funny one.
What freeze? Oh, good. Oh, yeah. Oh, like probably.
What are what are the three phrases to stop using to become a lovable boss? So you're the boss. How many right now people are working in Fabric?
Kind of 20, 25 people. I mean, I think kind of like, well, one phrase I've used in the past over the decades, and my very good friend who's worked with me a couple of times, Costin, would take the piss. I get enthusiastic and I'd be talking about something we need to do, and I'd like sort of type it. I'd like type like go 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 like into the into the message channel or whatever. You know, enthusiasm, not sort of command so much. I don't know whether that frustrates people. Maybe, are you busy? That's probably a pretty annoying phrase. Like, yep, I'm busy. I guess, you know, any phrase that indicates, or any phrase is the beginning of a kind of a digression or kind of an additional point to the one you're currently trying to focus on. And I think whether you're the boss or there's someone else, trying to keep the main thing is the main thing. So yeah, that's my best effort, at least at that.
Okay, one more. Like, let's do one more.
Nope. Stop.
Okay. Oh, okay. That's also interesting. So you've got like very interesting questions.
What's the most unusual but useful advice I've ever received? The first thing that springs to mind, at least, is there's always that advice. Well, advice I've given myself that at one point, which is that like it's good to be lazy. And I think, as an entrepreneur, I think it's good to be lazy because you're trying to avoid doing all the work yourself. We're trying to work out ways in which you can do it more efficiently, effectively, automate it, get someone else to do it, and that naturally leads you to kind of scale your organization, and maybe also to think about if you're thinking from the perspective of a customer, how they might be thinking about how they want to make their world bigger, better, faster, cheaper. I think the other advice is to focus on how to make yourself utterly replaceable. So not irreplaceable, but replaceable, and such that the way you operate, you could remove yourself from the organization, and all the water, you just slip out like, removing your hand from water. It wouldn't be like you're going to put your hand in a vat of porridge or honey and it all came with you. So that, and it's a way of thinking about empowering everybody else around you, and doing so in a way that is not trying to make yourself critical and sort of trap information or processes or knowledge or in some weird way, make the organization dysfunctional, but rather that if you make yourself irreplaceable, that creates a dynamic, even a psychological dynamic, that means that people want to keep you around. So there's something in that, which sounds maybe a little counterintuitive, but I felt it was actually quite useful.
Like I loved what you said about like being lazy. I've heard another podcast with you, and you've been saying, "Oh, I'm so lazy," and I was like, "Yeah." Every person that I met is super successful. They're saying that they're lazy. They just like don't. It's not coherent, being lazy and being super successful.
Well, but I think it's all relative, of course. And the point is that if you're constantly feeling you're lazy, you're constantly trying to remedy that, which means you end up ostensibly on some calibration not being lazy. But yeah, I mean, I definitely, having a kind of fierce sense of urgency around this, which is kind of akin to not being lazy, that's also important. like, make your time here count, do something of note, you know, keep everybody else around you happy. Those are good things, and I'm at least strive to do that as much as I can.
Yeah, awesome. Thank you so much. It's a great conversation. So I just would love to finalize our podcast maybe with some of good advice to the newcomers to the industry. So the new entrepreneurs that are coming to Web3, what would you say to them? Like using your experience as entrepreneur, founder, investor.
Look, I mean, in some senses, I feel, I know nothing. I mean, the pace at which this is moving ahead is phenomenal. You can be very, self-taught, so incredibly fast. If you have, you're focused on some technical skill, be it token economics, be it design, be it, smart contract coding or auditing or testing or whatever it is. I think if you've done that, and you can both teach yourself, become well known, keep learning, publicize your capabilities, build a community, all of the things that are essential to this space, out there in crypto, Farcaster, or Blends, worlds, online, and I think you do that, you'll collide with incredible people. And if you just keep, bouncing off them and allowing them to bounce off you, I mean, Web3 is incredibly kind of like, travel and conference and community first environment. So try and work out how you don't burn out and do that too much. But I think if you take those actions, you'll work out what you want to do. You'll find your slot. But just like I was saying, just get busy with cutting small first checks if you want to be an investor. The same applies to everything else. Just get busy with building a small community that gets bigger. Get busy with writing a small, piece of our own token economics, and that'll lead to the next. Get busy with writing a small piece of code and on small products, small public good, for example, and it'll lead to the next. And I think that's all I've picked up from what the founders themselves are doing. This is which is, not totally different from what I experienced myself from back in the day, but it's all really accelerated and magnified compared to that. And, I think it's just fantastic to see what people are capable of these days.
Yeah, thank you so much. So I would love to thank you again one more time for amazing chat and inspirational as well, like very visionary. So it's amazing. Thank you so much, Richard. I also would love to ask the audience to check below also the Twitter of Richard, also connect with him and follow also Fabric Ventures and check also their investment thesis and maybe even submit your project there. So that's I think their DMs are open, right, Richard?
Yeah.
DMs are open.
Yeah.
Over. All right. So and of course, like, subscribe, and share this video if you like this type of content. So thank you so much. And so see you very soon, probably in Lisbon, right?
Exactly. Thanks, Violetta. Well done for the podcast you built, and thanks for doing this for the community.